Okay. Looks like everybody can hear me. Welcome, everyone. Thank you for joining us. This is our first segment of Beyond the Blueprint. We're going to focus on Miami real estate. I'm super excited to have Anna and Ryan, as well as our very own Jason here, to talk about Miami real estate. So we'll start off with introduction so everybody can get to know everyone. We'll start off with Anna. She's coming.
Okay. Yes. Can everyone hear me now?
Yes.
Fantastic. Apologize for the technical difficulties. So my name is Ana. People refer to me as Ana Analytics. I run something called Analytics Miami, where for the last almost 10 years, I've been publishing long-term trend analysis in the South Florida real estate market. My focus from the beginning was to place market action within cycles, within macro cycles, identifying what drives the cycles, and then also drilling down and charting what we see at a micro level in a cyclical fashion as well. I found that was lacking when I came to Florida 10 years ago in the residential spaces. People reported on residential real estate in a very sort of myopic, cherry-picked way. So I published these reports where I give a macro overview, a cyclically driven macro overview of the South Florida markets. I broker deals, and also I consult with developers, helping them figure out what to build based upon realities and projection of the pipeline. I keep my own very granular internal pipeline in the pre-construction landscape. And that's it. That's me.
Amazing. Thank you, Anna. Ryan, I'd love to hear from you and give your intro.
Hello, thank you for having me on this. It's a pleasure to be here. My name is Ryan Ray. I am a neighborhood and new development expert / influencer here in Miami. I moved here about 8 years ago, and I'm obsessed with the development and things that are happening here in Miami as far as new development goes. I'm known for taking pictures of new development sites in Miami and keeping people up to date with them. I also have a podcast with Anna, Ryan and Anna on MIA. It's one of my favorite things. And yeah, so I keep people up to date with what is happening in new developments and in neighborhoods.
Love it. Thank you. And Jason, give us a little bit of background.
Awesome. Jason, I'm one of the co-founders of Parcel. I primarily spend my time focusing on data and the lab, Parcel Labs, if folks are familiar with it. Parcel Labs helps curate the daily price feeds that traders on the Parcel platform have exposure to. And we are continuously looking at ways to improve those data streams through integration of additional sources and making sure that we're always accurately printing the right price for markets around the world.
Appreciate that, Jason. Cool. Thank you. And so one of the topics I want to open up with is just the resilience of the Miami market, right? Like, for those of you who listen to Ryan and Anna, you hear this on their podcast. Jason has also covered the resilience of the Miami market. I want to start off with Anna or Ryan on the topic of, like, why has Miami been so resilient? Like, what has happened over the last few years that has made Miami just so resilient in this regard?
Okay, I'll start off. So I started commenting heavily in the immediate aftermath of COVID that I perceived that we were in a period of rapid transformation where the financial polarities of the country were shifting away from what I've been calling 20th century epicenters, capitals of commerce that were established to 20th century pre-internet, such as the New York City financial capitals, tech hubs in the West Coast, and so forth. And it's important to recognize that nothing is forever. Even if something seems like it's entrenched, nothing is forever. And we had this cataclysmic event. And I felt that the cataclysmic event in many ways supercharged us into a 21st century post-internet reality, and that there was a change of behavior and change of habit underway because habits were broken long enough to allow the formation of new ones. And that even if 10% of people change their behaviors or their locations in this case to take advantage of the capabilities of the internet to disperse, the change is enormous. And what we're seeing happening in South Florida, why our market has been resilient, is because it's benefiting from this wealth and talent migration. There's a tremendous migration of wealth and talent from these 20th century epicenters, as I've been calling them, and it's not stopping. We know that for the first time ever now, the state of Florida has more AUM than the state of Connecticut. The 6 fastest growing southern states now contribute to more of national GDP than the Boston, New York City, Washington, D.C. corridor. And the census data keeps corroborating it. So we had census data that came in from 2023. You can get it on census.gov, the raw data. I downloaded it, I charted it. And no surprise, the top 2 winners for interstate migration were Texas and Florida with a 0% tax rate. The top 2 losers were New York and California with the top marginal state level tax rate of over 10%. And if you look down the whole list of all the states, 50 states plus DC, you're going to see that it's very clear. People are leaving high tax states for low tax states. And then the other correlation, and I don't see that reversing. So I don't see all of a sudden a net exodus back to high tech states that also tended to be high lockdown. And that's important because all of this sort of supercharged post-COVID, it was the high lockdown blue states that started hemorrhaging tax-paying population. And I don't see that reversing. In fact, the correlation in this 2023 data goes further. If we break it down by governor, it was the 8 of the 10 top winners had Republican governors, 9 of the top 10 losers had Democrat governors. And that correlates with the tax rates and correlates with the lockdowns. So I don't see any of that changing, and I don't see a net exodus back to high tax states. And that's really what I think fundamentally is buoying up our markets.
That's super interesting. I'm actually part of that statistic as well as a Florida man myself who moved from California. Ryan, tell me a little bit like how you see this like happening on the ground. Like what are the changes that you've seen that kind of like validate qualitatively like what we're seeing in the data?
Yeah, so what really happened after COVID from an on the ground point of view is that people realized that they could live, work, and play in Miami year round. We were always sort of a play and live sort of place, a little bit less on the live. But what happened is people were here they came from California, New York during COVID, and they realized, oh, wow, the summers aren't that terrible. We can live here year round. And what happened is Miami as a place was kind of an open secret that it was a great place to live. Like people were so scared away by the potential for hurricanes or the crazy summers that they were like, oh, we can't live there year round. And then they were sort of forced to or became down here during COVID and were like, oh, wow, you have a vibrant urban core, you have arts and the beaches, and then you also have the cost of living that is 30 to 40% less than these superstar cities, New York, California, LA. So what happened is that Miami sort of overnight became a year-round city. It really wasn't a year-round city before. People would come down here as snowbirds and then come back. You could walk around Brickell when I moved here in 2017 in the middle of the summer and look up at the condos and like 20% of the lights were on. Now it's easily 80% in the summers. And also, what also is happening here is you are getting a ton more purpose-built multifamily buildings. We didn't have many before. So multifamily is when you rent from a corporation versus a condo owner. And now we have a huge chunk of it. Wynwood has multiple thousands of new units coming online in the next 6 months. So when you have that, you have people who are in apartments, they're here year round. And that brings up the vibrancy of the neighborhoods and has people who are here year round spending money in the local shops and all that. So that is really how Miami has changed. And obviously it's come with a rent increase for everyone. But we have I believe Ana says this in her stats a lot. We have a super high percentage of units under construction of the total amount. I'm sure Ana can give me the better clarification on that, but it's a really high amount. So it's really something cool.
That's super interesting. Yeah, like it's cool to get the data, really get an understanding of what those migration patterns look like, see what's happening qualitatively on the ground. But not all cities in Florida are created equal. I think my beloved Orlando or my beloved Tampa maybe haven't experienced the same resilience that Miami has. So Jason, can you tell us a little bit about like what's kind of happening and like we see the resilience in Miami, where are we not seeing that resilience, and how does that compare to other places around the country? Jason, you're actually muted on the spaces. right.
Apologies. I was going off. Once you get me going, it's tough to rewind that. You know, one of the things we do at Parcel Labs on an ongoing basis is we're looking for inflection points within markets across the country. We have one algorithm that is calibrated to look for early signals of distress, and there's three key inputs. There is supply, there is demand, and then there is price changes. Now, what we do is we control for the seasonality within any given market, so we can look at this across the country all at once and then comp markets against one another. And looking at supply and demand in isolation doesn't work. You need to look at how those are shifting together. If you have a 50% increase in supply with a negative 30% a decrease in demand, that creates a large skew with respect to buyers filling and getting the actual inventory that's available in the market. So starting in June, Florida began to flag on our radar for these large gaps in supply and demand, coupled with active price cuts on market listings. This continued throughout the summer and started to stabilize in mid to end of October. What was remarkable about Miami is while it was getting flagged across these key points, starting in June through the summer and starting to stabilize into October, the prices never actually gave back. The other Florida markets like Tampa and Orlando, they started to give back prices relative to their all-time highs or how they were trading at the beginning of 2024. But Miami, I believe in October, it was 1.5% off its all-time high. And remember, Miami was a pandemic ripper when it came to price appreciation. And I just looked at Miami Beach this morning on the Parcel platform, and it is 3.5% off of its all-time high. And that all-time high was set in July of this year. I think that's pretty remarkable given it's been tumultuous in 2024 for the Florida housing market and many markets in the Southeast and Texas included.
It's super interesting. Thank you for covering that. And that kind of segues me perfectly into something Anna and Ryan have spoken about on their podcast, which is like the impact of these cash buyers in Miami and like where they're coming from. Anna, can you jump in and kind of give us some background on like where is the money coming from today, and like how has that changed over time in Miami?
Yes, super, super great question. And just to touch upon one thing that what Jason was saying is 100%. The prices have not given back. And when we segmented condos versus single family, the single family home market is currently hovering around all-time highs. It's the condo market that pulls the aggregate down a little bit because for a number of reasons. One, there's the state law change coming into effect in 2025 that's affecting older stock predominantly. And then also one point that I keep saying for single family is that we cannot add more inventory vertically, whereas South Florida is not scared to build, which is great because we had one of the largest median rent increases in the nation. We need more stock. The point that Ryan was making earlier was on the percentage of multifamily under construction. We have more multifamily under construction as a percentage of existing inventory than I believe any large city in the United States. And so this is all great for rent, but single family, it's not going to help. So the single family market as a separate segment is at all-time highs. And I mean, inventory below $500,000 is down 87%, which attributes to the overall volume decline to the point of looking at supply and volume together. But on the topic of cash buyers, and where buyers are coming from. So a fundamental shift that we're seeing in this cycle, especially when we look at the high end and when we look at pre-construction condo sales, is the emergence of the domestic buyer. So we're getting tremendous buying from the Northeast and from other places in America, whereas before, pre-construction sales for condos in Brickell and the urban core were primarily targeted towards the Latin American buyer. Oh, is my microphone off, it says? No, it's on, never mind. They were targeted towards the Latin American buyer. And now when you speak to developers, which I often do, especially for larger units, and that's because I have a theory in single family home replacement, they can't find it. So they're selling a lot of large units in condo buildings now in pre-construction. The buyers are domestic and they're buying it as a primary or as like a high up there secondary. And that's a huge change in our market. And when we look at some buildings, we talk to developers, some sales, 40 to 60% of their buyers are domestic, and that would have been unheard of in previous cycles, completely unheard of. It was the exception to have the domestic buyer. And then when we start looking at cash, here's the interesting, factoid about our market. The higher up you go in price, the more all cash the market is. And then when you further drill down on a price per square foot basis, then it gets really shocking. And I love to drill down on price per square foot because that's where you see the biggest divides in action, the biggest changes in data pre and post COVID, because high prices per square foot isolate for both new product and product that's at prime location. Both things have to be true to get a high price per square foot. And that's where we see the biggest divergence in behavior. And that's where you see the appetites, the wealth and talent migration really reflected, because that was the spike. So past $2,000 a square foot in Miami-Dade, condos were something like 82% all cash for the first 3 quarters of this year. And the single family home market is 77% all cash there. And when we look at spikes in transaction volume past 2,000 a square foot, Miami-Dade County has 850% more transactions first 3 quarters of this year than 2019 for single family. So that across the board, those are the highest spikes in data. But then even at $1 million, Miami-Dade condo market is close to 70% all cash. But the higher up you go, the more it is.
That's really interesting, and it's really wild to think that, like, the more expensive things get, the more cash there is, right? And like this obviously has some impact on affordability. People might say that, like, hey, more luxury housing is actually making things less affordable. I know, Ryan, this is a topic that you're pretty passionate about. Can you talk to us a little bit about the housing stack and how that impacts just like overall affordability across Miami?
Yes, it's one of my favorite conversations because you have people who are NIMBYs, not in my backyard. And every time they see anything being built that isn't government housing subsidized, they're like, oh, it's luxury housing. It's only for the rich. What I say to those people is if you only want to build government subsidized housing, I hope you will enjoy your rent being $10,000 a month, because you have to build every part of the housing stack from ultra luxury, which we have lots of here in Miami, to luxury, to attainable, and then affordable. So you have to build every single stack, or every part of the stack, or the whole stack collapses. To go back to what Anna was saying about single family replacement projects, there has been multiple projects here in Miami recently where the developer has actually pretty severely changed the projects to adapt to this new reality of people who might want to buy a single family home but can't find one, so they're buying a super luxury condo that has very large units. So that's been a very interesting. We actually toured one, Aria Reserve, a couple weeks ago, that they actually changed the second tower quite a lot to go with this new trend in the market.
That's really interesting. Yeah, I mean, it really does matter, like the stack and just bringing more housing to a place, right? Like, people need places to live. That's very interesting. One area that I really love that y'all talk about a lot is development, right? Like, what buildings are coming online, like, what's even like being approved and gonna be developed, right? And like, I'd love to hear from y'all as to, what are some of the things people need to know about, like what's coming, what neighborhood is that in, what's going to be the impact locally there in Miami to some of these new developments, being built right now and coming online.
Oh, sure.
I mean, oh, go ahead.
Yeah, so there's a lot of projects going off right now, like so many. I did a tour of Miami World Center last week, and there were approximately, I believe, 30,000 units total that I was looking at in Miami World Center. And Miami World Center is only about 10 by 20 blocks, a very small radius of area. And when I moved here in 2017, the whole area was dirt. Now there's eventually going to be around 30,000 units inside that small area. My World Center is one of my favorite areas because they're really doing well in the pedestrian and the retail and adding all of it, everything from multifamily to ultra luxury. So my World Center is definitely one of my favorites, but there's a lot. I'm sure Anna has some she'd like to talk about too.
No, there's what's happening is that the region is filling in as much as has been built. I feel that more is coming, because when you drive around South Florida, I mean, I grew up in New York City, so when I drive around South, I wasn't, I didn't spend people who've been here for 40 years, whatever it is, they're like, wow, there's so much now. When I drive around and look around, I see it as still very buildable. So there's a lot of empty space, relatively speaking. And we see, you know, Edgewater is filling in now. There's some cool projects going up there. Even up, I had a tour of a site up in North Bay Village yesterday. North Bay Village is finally getting developed, and it's going to have, you know, great 360 views. It's a great parcel, great connectivity. It is the way it is. It's kind of all just filling in. So I think we're at this point right now where some areas have been very built out, and now we have new areas that are at the forefront of the new things being built, and look at some awesome new product. And it's just part of the continuation. I was in a panel last week about West Palm Beach, and so these patterns that I talk about in pricing, cash buyers, transaction volume at the high end, these patterns hold actually tri-county. Broward County is a little bit muted. The slope's a little bit different, but the same pattern. But Palm Beach County is acting very, very similarly across the board. It's a question of flavor of where one moves to from the Northeast. Do they like Palm Beach? Do they like Miami-Dade? The patterns are similar. And so we're seeing all of this play out tri-county, and now we're seeing interesting new developments coming up in West Palm Beach. It's all going to fill in. You just look at the map and you see, like, you have areas that are very solidly built out, and then the rest of it is also equally nice. Just more people keep coming, so it's going to keep filling in.
Yeah, I want to add to that.
Go, yeah, please.
Gus, one of the really important things to realize right now is the Live Local Act. Live Local is supercharging development in Miami because it allows developers to bypass height and also the floor area ratio for certain neighborhoods and certain cities by making a percentage of the building affordable based on Florida's percentages. And so you are seeing huge amount of projects. I mean, just like dizzying. I can't even, there's so many, like that is just adding to the crazy development. And that's at the slightly lower end than ultra luxury. You're having the Live Local style projects, and then you're also having the explosion in single family replacement ultra luxury condos. So you're getting the whole stack exploding right now.
That's incredible. And can you guys, can one of y'all give us like a bit of a sense of like what is the price per square foot, you know, at these varying stacks, and then like as it relates to developments, like where are those going to be priced coming online in the Miami area?
Okay, so the reality is that it's virtually impossible to deliver a product for sale at less than, I keep saying 1,000 a square foot, but that basically doesn't exist anymore either. It's extremely, extremely difficult to deliver below 1,200 square foot, but let's just say 1,000 a square foot. And so, which is part of the reason that we have also an emergence of a lot of what we'll call condo hotel inventory and small units. So when you see a new development that has units starting under $700,000, they're small, and they're almost always a condo hotel, meaning that you could rent them daily, and then it varies if the building lets you manage it yourself or if you have to be in the building's hotel program, whatever. But generally speaking, they're small micro units, and like down, I mean, listen, I grew up in New York, so like I'm not phased, but people in Miami think it's people who grew up here get a little bit shocked, like 350 square feet, 400 square feet. And that's how you get units. Even when they say starting at $500,000, they're like 400 square feet. And so we're seeing some of that come out because you can't deliver for less. Now, when it comes to Live Local, most of those are rentals. Most of those are multifamily projects. And the way that works is they get to have, I think it's 40% of the building has to be up to, it's measured as median income of like 80% of median local income, how would they define it? So it's not even going to be that cheap. And so now we're seeing early, it's still very early days of this. So stuff is getting announced. Various areas are challenging it. I know Miami Beach challenges everything, but it's kind of shaking out what's going to happen. There are a lot of projects that are including just the minimum, and there's some where they're trying to do a whole large scale one. And I was doing some work for a guy up in a West Little River named Pablo Castro, a very interesting guy. He wants to build about 6,600 units where the entire project is Live Local in West Little River. And so they're working on getting that moving, and that will be fantastic. He has some vision or methodology. I think he was the largest builder of affordable housing in Spain at one point. He's from Spain. And so he believes that he can take whatever methods he has for economies of scale and whatnot and create this huge campus-like project where the units are nice and not very expensive, all of them, not just 40% in West Little River. So we'll see if that happens. So it's very early days of Live Local, but I'm optimistic to see what'll happen. But on the condo end, you just... Even in Broward County, you can't deliver under 1,000 a square foot. And that's really the limiting factor in terms of size and price.
Jason, you're on mute. You're on mute, Jason.
2 times. Anna, Ryan, I actually have a question for you all. Because high cash purchasing, and, inflow of development, one thing I've noticed, over the past couple years, many of the pandemic winners, if you will, with respect to home price appreciation, are associated with large institutional investor markets. This would be Tampa, this would be Atlanta, this would be Charlotte. Now, Miami, on a relative basis, doesn't have that type of institutional activity, and those markets will have high all cash purchases because a lot of it's coming from institutional purchasing. So when I'm hearing you talk, I mean, I wonder. It sounds like this could be like individuals that is really driving this, and if that's the case, that seems to create a really strong resilience to the market because there's more independent actors that are coming into the marketplace that will make independent decisions as opposed to these larger groups that can enter and exit at will.
Yeah, 1,000% correct. It's these are individuals who are buying in pre-construction condos, the single family homes too. Institutions, people in the press, people like to talk about institutions buying swaths of single family and so forth. But the segments of the market that we're talking about here, like high-end homes, don't have yield. They're not the ones being purchased by institutions. So correct. These are individual actors who are moving here. I don't know, call it the Ken Griffin effect, the Jeff Bezos effect, whatever it is. It's like there's like an emperor's court. People leave, they follow. Like Ken Griffin did an interview that was all over the place a few days ago. I don't know if you guys saw it, and he was basically talking about how much better his quality of life is, how optimistic he is in South Florida, how it's the place to be, blah, blah, blah. And the reporter at the end of the interview was like, wow, listening to Ken Griffin talk now, like the conclusion is that everyone should move to South Florida.
And I actually have one other question because we've noticed this 2 years in a row now. So we see a spike in Miami Beach prices at the first few weeks of January. Is there anything with like how folks buy with like taxation purposes and like 2 years in a row, we've seen a large increase in price per square foot appreciation for a few weeks at the beginning of the year, and then it dips off. Now, I don't know if you're aware of any strategies around that.
No, I'm not actually. So, barring like a really strange year, the second quarter of the year, be it in Miami Beach, is on a county level and then on a city level. The second quarter of the year is almost always the highest transaction volume year. But I haven't. Why would the price per square foot be higher in that first month? I don't have the answer.
And I don't know if this helps. I mean, what we're if it's a thinly traded market, if more expensive units are moving through during the first part of the year, that would move the price per square foot for how we're calculating it.
Yeah, for sure it would. It is. Miami Beach is actually a pretty small place. The population of Miami Beach is something like 80,000. It's very small. I prior to living here, I thought that it was just the same as Miami. I didn't even realize it was a separate city, but it very much is. Its own mayor, its own policies. It's very difficult to build. It's like a whole separate thing. But yeah, it is. It is quite thinly traded. Just it gets a lot of attention and press that's disproportionate to its size. So it's definitely a few large transactions skew the data on a monthly basis, like 100% Miami Beach.
It's awesome. This is very interesting. For those listening, Ryan had to hop off. I do want to leave us. I do want to kind of end this with kind of some predictions or some things to expect in 2025 from both Anna and Jason. Anna, we'll start with you. What's going to happen in the Miami area 2025? What should people look out for? What do we expect in like price appreciation or depreciation? I'll leave it open ended for you, Anna. But yeah, floor's yours.
Mic back on. Cool. Great question. So I see on a baseline level, I see the same sort of forces will continue to shape our market, meaning I don't see, while there is an abatement to speed because we had a cataclysmic event. There's a surge. You're not going to see the same speed. I expect a general continuation of this wealth and talent migration coming in, especially as word gets out and we solve the private school issue. That's a bit of a friction at the high-end market is all the private schools are full, Tri-County completely. But whether there's enough money down here, it's a solvable problem. They're looking for land to build more schools, et cetera. So I see a continuation of this wealth and talent migration. And I see a continuation in a divergence in behavior, both between, single family and condos, and then also within those, the high end and the low end. But I'm treating them separately because the low end of the condo market is being affected by this law change coming effect in 2025. What will save the portion of the older condos that are not in trouble, because not all buildings are in trouble. Some were responsible people. So the ones that are not disasters will benefit because there is no new inventory coming at those price points. It is impossible to deliver a condo at $300,000. So any building that's older, that's not a disaster, they're going to benefit because they're the only ones at that price point. So that's also actually a floor to that market. But having said that, there are challenges in that portion of the condo market. So I see a divergence in the condo market, a continued divergence between old and new. And I see, baseline, single family and condo, product that caters to the incoming wealth and talent migration is probably an undersupply, if anything. And that data gets lost when you report in the market as a whole, because obviously the vast majority of transactions, half the market transacts below the median, obviously, and 90 or 80% of the market is below where people coming from the Northeast are buying. So when you report in the market as a whole, those data points get lost. But if you dig in, which is why I like digging in a high price per square foot basis, because it really isolates for new product in prime location. So new product in prime location that caters to the wealth and talent migration will continue to, I think, outperform, and if anything, be an undersupply. And then especially that I double down on that point for single family, because you cannot add more inventory vertically. And as the city continues to grow, which I think it will, the region continues to grow, like waterfront, you can't build more waterfront. That's like prime scarcity, which is why we're seeing those things. I mean, those values are through the roof and they're not going anywhere. And when people do buy pieces of land or older houses on these nice parcels, they replace them with a maxed out, super expensive $5,000 per square foot, like $30 million house. And that's also a continuation of that trend. And so single family, lower end below $500,000 has all but disappeared, almost 90% fewer active listings than before COVID. I see that continuing. And that's where most of the transaction volume loss is in the single family home market. So they love saying, the press likes saying, transaction volume down. Okay, yeah, below $500,000, supply is down almost 90%. From $500,000 to $1 million, we were at all-time highs for Q3 transaction volume this year. And then when you start looking at past $1 million, they weren't at all-time highs, but they're 2 to 3x versus 2019. So the losses in volume are due to the low end, and I see that continuing. So basically, to sum it all up, portions of the market catering to the wealth and talent migration will continue to benefit. This is also part of the national wealth polarization, whatever. Other segments depends. The condo market will continue to behave differently than the single family, but I see it all continuing. That's fine.
All right, so strong 2025 for Miami, it sounds like, Anna.
I agree.
Perfect. Jason, how about you? What do we expect in the city of Miami here in 2025 from the Parcel Labs perspective?
I think Anna said it awesome. It's, how do you stratify the market? There'll be relative winners and there'll be relative losers within the stratification of the Miami housing market. But thematically, um, Miami has proven very strong through some tough housing market cycles. I think there's a lot to that discussion point earlier that this isn't it doesn't seem to be driven by large institutional portfolios coming in and buying 2,000 units. It's individuals coming up to the decision to move to Miami, and that is that's pretty sticky with respect to prices because unless there's a black swan event, it'll take time to unwind prices. So I think the foundation from everything I've seen and the fact that it's been this resilient through a couple tough housing cycles recently, I think Anna's point is I agree. I mean, I see Miami being pretty strong.
Amazing. All right, we'll leave our listeners off with Anna. Where can people find you? Where can they get more information from you? Let us know.
Sure. Thank you so much. So my website is analytics.miami, and that is where I publish quarterly reports you could download for free that are macro analysis in the market. They can also follow me here on Twitter, Ana_analytics_, and on Instagram, Ana_analytics, where I post more frequent, smaller market updates and jujitsu training. That's my crazy double life. So you see me training and talking about nerdy things. That's my Instagram.
Love it. Love it. Jason, where can people find you if they don't already know you?
The Twitter here, the Jason Lewis handle, the Parcel Labs handle, the Parcel handle, any one of those, I'll see you. Yeah, so I think those are probably the best spots.
And the Parcel Labs API, of course.
Parcel Labs API, yes. We would
Infamous.
love to have more folks in the lab and poking at the data alongside us.
Perfect. And to everybody listening, thank you so much for your time. We hope to do more of these and give people insight on a variety of cities and places around the country and the world. All right, everybody. Thank you so much. Until next time. Bye bye.